What's up, everybody? Thank you guys for tuning in to another episode of the AMG Report. I'm your co-host, Joshua Mays, aka Mays the Mortgage Man.
And I'm Nate Diller, your co-host, Nate the Mortgage Goat. And this is my mascot, Popcorn. Say hi, Popcorn.
He ain't got much to say, but we represent Agape Mortgage Group, where we do all loans with love. This week, we are super excited to be bringing you guys another episode. But before we get into the program, make sure you guys are sticking around for our question of the week. Yo, Nate, what's the question of the week?
So, the question of the week is, how many years do I need to be employed to be able to utilize that income to qualify for a mortgage loan?
Do you know the answer to that?
Now, for our program highlights. Mays, tell me a little bit more about this Trio Lease to Own program.
Man, Nate, I'm glad you asked. Trio Lease to Own program is a great option for anyone that's thinking about purchasing a home but may not be able to qualify for a home for whatever reason at this time. So there's so many reasons that you could fall into this category. Maybe you're someone with credit issues, maybe you don't have enough income history, so you're self-employed and you only have a year of self-employed income. We've seen people who use this program. Maybe you're migrating from another state and you're not sure of the neighborhood you want to live in long term, so you utilize this lease to own program to your benefit to kind of, test the waters and figure out if the home is right for you.
Wait, Mays, so you telling me at the same time I can go purchase this home, but like lease it at the same time?
Yeah, dude. And normally people do a 3 to 5 year lease. Mm-hmm. At any point during the lease, you can just say, forget it, I love this home, I want to purchase it, and terminate the lease and become the flat out owner. But if you want to take advantage of a 3-year lease or a 5-year lease, for sure, take advantage of it. And the best thing about it is those payments that you're making for 3 years, 5 years as you're leasing it, when it's time to take over ownership, those payments are going to be applied towards the equity. So pretty much it's like putting money away in your piggy bank as you're leasing. So if you're someone out there that's thinking about taking advantage of ownership but may not be in that situation to actually purchase a home right now, don't just stop at no. Think about the lease to own program.
Man, that's a mouthful. There's so many people out there renting homes. Man, is there like a income requirement or something?
As far as the income requirement, there is no specific income requirement. It does depend on the county you live in. One thing I can say is the debt to income ratio requirements are similar to qualifying for a mortgage. So just make sure you got some type of income. We'll see if we can utilize that income. And like I said, the benefit is at the end of the day, if you don't want the home, you can walk away, no scratches, no penalty. You do not have to purchase that home at the end of the day. So make sure you're checking out the lease to own program.
Wow.
And now to our credit tip for the week. Nate, could you tell me a little bit more about how a collection account is going to affect someone when they're trying to qualify to purchase a home?
Thank you for asking. So a collection account can really affect you from qualifying, but there's hope. What you want to do is you want to make sure that you call that collection company and you want to pay for a deletion. Paying for a deletion removes this negative collection account from your credit report.
So, Nate, tell me a little bit more about this. If I just pay the collection account, they won't automatically delete it from my credit report?
Not always. So just because you pay for your collection account, it does not be removed from your credit report. So it can still affect you to this day, and it's zero balance.
And so, Nate, I have another question for you. As far as with a collection account and trying to qualify for a mortgage loan, how else could that collection account affect me? Does it, if I have a collection account, am I just automatically not approved for a mortgage? Can I still get approved for a mortgage with the collection account?
Actually, you can. So if you have collection accounts and for whatever reason you just haven't paid them, you still can qualify for a mortgage. You still can be approved. We just factor it into your debt to income ratio a little bit differently.
So make sure you guys, when it comes to collections, take an account. That collection account is going to eat into your debt to income ratio. We take a percentage of the total balance of the collection account and factor it into your debt to income ratio, which means it's going to affect how much loan you can actually qualify for. So if you're already on the cusp of qualifying for an amount that you're looking for, a collection account can hinder you from actually qualifying for that amount.
Absolutely.
Nate, let me ask you, did you know
What did I not know?
that applying for a mortgage loan with a co-borrower may not always be in your best favor? So what I mean by that is, if you're someone out there that's thinking about qualifying for a mortgage loan and adding a co-borrower to the loan, make sure you stop and think about this first. In the mortgage industry, something we say is an application is just as strongest as its weakest borrower. So Nate, if you have 800 credit scores and I have 700 credit scores, and I'm trying to add you to my mortgage loan because you have the better credit scores, it will not work. You can be on the mortgage loan, however, the lender will take my 700 credit score. So we always take the middle score of the lowest borrower. So make sure you guys are keeping that in mind before you're adding a co-borrower. How is that co-borrower's credit score going to affect your mortgage loan?
Well, let me help you dispel this myth, Mr. Mays.
Go ahead.
You don't need a 700 credit score to qualify for a mortgage.
Wait, you don't need a 700 credit score to qualify? So what credit score do you need to qualify for a mortgage?
Well, I'm here to tell you that we can qualify your mortgage with a 0 credit score.
Wait, you tripping, man. How?
I'm glad you asked. So we can actually qualify you on what's called traditional credit.
Okay.
So by using your rent, by using your cell phone, by using things that you have your monthly obligations that doesn't go on your credit, we can use that to qualify you for a mortgage.
That's crazy. So tell me a little bit about how I can qualify for other different programs. What's the credit score for conventional? What's the credit score for FHA? What are the different credit scores?
So for FHA, you can actually qualify for a minimum credit score of 500.
Okay.
Now there is a stipulation to that.
Okay, what's
You
that?
need 10% down.
10% down. Gotta come with the bag if you got the 500, baby.
All right, and then also there's a 620 credit score minimum requirement for conventional loans.
Perfect. So, guys, if you want to keep your options open, higher credit score, right? The larger your credit score, the more flexibilities you're going to have for programs, the more flexibility you'll have as far as interest rates, so you're going to get better pricing, and you're going to get better private mortgages insurance rates in some instances as well. So credit scores are really important, but you don't need a 700 credit score to purchase a home. If you're someone on the lower end, make sure you guys are reaching out to us and getting with us so we can figure out what your situation is and figuring out, which program you'd qualify for with your specific situation.
Lastly, I like to add that you don't need a credit score to qualify for a VA loan. So for all the veterans out there, we are here to help. If you have no credit score, none, like just 0, or if you have a 500 credit score, same with the FHA, same with the VA, we can qualify you as well with no down payment.
Wow, make sure you guys are calling in. And now for our question of the week. Nick, tell me, how many years do I have to be qualified at my place of employment before I can use that income to qualify for a mortgage loan?
I'm so glad you asked about that. So this is a big thing in the industry because obviously a lot of people change jobs, they move from different areas, things like that happen. But as long as you have a 2-year consistency of work history, you should be good to go. Now, there can be gaps in employment, but it's only a max of 3 months. So if you work a job and you've been off 3 months, as long as you follow it up with another good 6 months, we should be good to go.
Perfect. That is great information. We appreciate that, Nate. Make sure you guys are prepared to explain the gap in employment. I can't tell you how many times someone's come to me with a gap in employment and they get a little offensive when I ask them why they took off that time. I'm not asking for personal reasons. The underwriter is going to ask that to get the approval for the mortgage loan. So that's your answer to the question of the week, guys. We really appreciate you guys tuning in to another episode of the AMG Report. If you guys have any questions, concerns, or would like to qualify for a mortgage, make sure you guys are reaching out to us. Send us your questions and we'll make sure we get them answered here right on the AMG Report. Love you guys. Have an amazing, blessed week. Peace.